Good afternoon. I'm Ron Richardson, Managing Partner of Vista Investment Partners, also Senior Portfolio Manager. And I wanted to get on here, first of all, and thank our clients for allowing us to be here, and thank you for your interest in Vista. But I want to get on here and do a few more of these videos to kind of keep you up with what's going on with the market. And some of this we sort of knew coming in the year. I said at the beginning of the year, I thought it was going to be a lot more bumpy year, and it's turned out to be a lot bumpier than I even expected. And that's not to say that I know exactly what's going to happen in a given year. We have a general idea of the direction of the economy, the direction of earnings, and the macroeconomic picture. But that's how we develop our sort of tactical view on the market and what we're going to do. So we thought that there would be a bumpy year and that it would become more of a tactical year. And so far, that's what we experienced. I've said this before. I didn't think we were going to come out of the gates and go down 10% in January, but that's sort of the way it works in these more tactical years. Is we get surprised sometimes by directions of move, and surprised by geopolitical things like the situation in the Ukraine. But let's take a look at what we know about the economy. The economy was actually very good late last year, and we knew the Fed was going to have to start raising rates. It was a matter of when and how much, and the market became concerned with inflation and the Fed, and then we had a geopolitical event happen. That really hasn't changed the backdrop in the U.S. economy. We still are generating a hotter economy than we would like. We anticipate the Fed raising rates by 1/4 point this week. And we expect the Fed to be data dependent, meaning going forward, they're going to pay attention to the data and to how the geopolitical global picture develops. The sanctions against Russia are a drag on the world economy. That's just the nature of the beast, just like tariffs are. They do not help the economy, but they're very punitive in their response. I got to check my notes here to make sure I cover some things. Okay, so we know the direction of the economy is positive. It's been strong. This recent decline in the market has actually taken sentiment, how investors feel about the market and the economy, to negatives that we saw at the depths of the pandemic, and yet the market's only down 12% from all-time highs. So we think that this is a really unwarranted concern, but not unusual for this stage in the economic cycle. Again, we're going from an economy that was buoyed by a lot of stimulus into a normal economy without stimulus and an increasing interest rate environment. That is still a very healthy environment for the market. I mentioned a minute ago, briefly the sentiment. The mood of investors is the worst it's been since really right after the pandemic in April of 2020. With the momentum down and the sentiment negative, we got close about a week ago to almost one of those, throw all caution to the wind and put things in, everything you can in the market, much like we did in March of 2020. So we didn't quite get there. The market still feels heavy to me. It looks like we're trying to find a bottom. But the exciting thing going forward is that once we make this bottom, the forward returns are really good. So if you look at history and the volatility we've seen, when the volatility ceases, forward returns are extremely good. And so we have one of our research providers had two different illustrations of the volatility and the momentum. Once the bottom is in, the forward returns, one of the indicators was 14%, the other one's 20%. So we think we're closer to a low. We think the upside's pretty good. It's going to be a bumpy year. I don't think that's going to change. Again, we don't know exactly where the market's going, but if you have exposure to equities, we don't think it's a good time to be a seller. We don't want to sell into the decline. We'd rather wait and when we have a more stable market. Thank you very much. Please don't hesitate to reach out to us if we can be of any service.